Hello and welcome. You're watching KYC. I'm your host Harsh Saita, and today we're going to look in at Info Edge. It's an interesting company because one, it's an expensive one. Two, it's also a holder in Zomato as well as PB Fintech, two absolutely new age listed companies now by themselves. It derives a third of its market cap from those two companies. But most importantly, what does Info Edge do in terms of core business? And the core business is Naukri.com. So hiring trends, Q4 has been better. Is FY26 going to be even better in terms of hiring trends is what I want to understand. Because if you're trading at the kind of valuation that Naukri is trading at, which is around 75 times 1 year forward price to earnings, then I want to know whether the business underlying is going to do as well in terms of growth. So that's going to be the first piece. And within this hiring, IT is going to be is the big bulk of the hiring that Naukri generates. And therefore, is IT hiring at a risk given AI as well as some of the other trends playing out? In the core IT business, a TCS, Infosys, we're not seeing hiring pick up, even though the Info Edge business does not seem to be very affected by it, but one would want to understand whether there is that risk which Info Edge business carries from a hiring perspective. The other piece is other businesses. So the other businesses that it does, the likes of a Jeevan Sathi, 99 Acres, Shiksha. Jeevan Sathi is the matrimony platform, 99 Acres is the real estate platform that it runs, and Shiksha is the educational platform that it runs. Now, when you're looking at profitability in all of these businesses, has not happened. So basically, Naukri is the one business which is profitable, which kind of diverts money into these businesses to ensure that these businesses can continue to run and continue to scale, and hopefully at some point start to generate profitability, core profitability. And that's what all business is about, right? When does that happen is really the question, and whether when that happens, as and when it does, whether that is sustainable or not. Now, the fourth piece of this is how do you monetize some of these? So maybe they turn profitable at some point, maybe next year. Do you monetize your opportunities at that time? Is there a plan to monetize? Because shareholder value will get unlocked only when you monetize some of these prospects and businesses. And what are those plans? And the last one is with regard to promotion spends. Now, this is more micro than macro. A lot of the margin also depends on how promotion spends go. And what brokerages and analyst community has done this time around is they've reduced the EPS estimates with regard to FY26 and 27, saying that there may be some amount of pressure with regard to margins which are coming through, and some portion of that is because of promotion spends. So I want to understand whether that at all is at risk or not. So all of that and more once we start to analyze Info Edge, and of course we'll speak with management as well. But first off, I want to start by introducing the company itself. At its very core, it's an online classified company. It has a portfolio of brands, and what it does is it services companies as well as individuals to help with regard to marrying both sides with regard to hiring and people. So that's essentially what it does at its very core. That's how it was conceptualized and started. Now it owns a bouquet of brands. So let me talk about the first and the largest one that it owns, which is Naukri. It's an online recruitment platform. This is the first part of the business. The second part of the business is you have a 99 Acres, which is an online real estate platform. The third one is Jeevan Sathi, which is an online matrimonial platform. And fourth one is Shiksha, which is an online educational information services platform. So that's how it runs its business, core business. Outside of this, it also incubates other businesses. So it acts as an investor and has invested in several startups, starting from a Zomato and a PB Fintech, and now runs active portfolios within itself. It also has an AIF where Temasek has a 50% investment in. So it's fascinating how they have pivoted in terms of their business. They started off with core Naukri, and they had the very, very famous founder, Mr. Sanjeev Bikhchandani, who is now worth, $3 billion odd dollars. But he incubated this business from scratch, and it's a $0 to $3 billion story for someone like the founder of Info Edge. But that apart, it has investments with carrying value of around 640 odd crores. So all of the cash flow coming in goes into these investments in new age tech companies, including the likes of an AI. Now they have financial investments in some of these companies as well, which are flashing on your screen, but along with it, they have several financial investments in plenty of companies through their AIFs. These are some of the strategic investments that they've done, of course, which are very similar or which help their existing and current businesses. So all of that, plenty to unpack, of course. Now, in terms of the largest ones, the financial investments, the largest ones is Zomato, where it owns a 12% stake. Zomato is worth 2.2 lakh crore. 12% of that is around 25,000 crore in itself. PB Fintech, which is again worth roughly 10,000 crore or 12.5% stake in PB Fintech. So overall, the value of a PB Fintech holding of Info Edge is around 10,000 odd crore. So Zomato plus PB Fintech at current market value is worth around 35,000 crore within that Info Edge basket. And then, of course, it runs Info Edge Ventures, which is what I spoke about, the AIF, through which it makes financial investments. So all of that. But let's talk about the core business a little bit more. This is how the recruitment business revenue has been growing. Look at it, 770 crore in FY21. It's gone up to around 1982 crore in FY25. But you look at the last 3 years, right? FY22 to 23, fantastic year. 24, 25, growth not coming through, right? You can see that visible in terms of the numbers. And this is the core business of Info Edge. So this is where I have started to try to understand as to how the risk is getting built in with regard to both valuations. That's one, something you want to understand as well. And two is the fact that can this grow and scale at the rate at which it did in FY22 and FY23. That's really the setup that I will want to look at when it comes to recruitment. Now look at Matrimonial now. Largely flat, right, over the last maybe 5 to 6 years. No real traction seen here. Profitability, you'd want to wait and watch and want to understand how this becomes profitable, because currently looking at the numbers doesn't seem like an enthusiastic set. Let's look at property now, the 99 acres business. There too you've seen decentish uptick, right? So this one again chugging along fine. And the last one is education, where you've seen the sharpest uptick in terms of the way in which the business has scaled. But you want to try and understand whether the scalability is followed by profitability or not, because that will hold its key. In terms of the total, the net sales sits at around 2,657 odd crore, but out of that nearly 2,000 crore comes from the Naukri core business. So that's how large Naukri is in terms of contributor to top line. Even in terms of growth rates, Naukri, of course, hasn't done as well in FY24 and FY25, just an 8% growth in FY24, just a 10% growth in FY25. So the recruitment growth hasn't come through, as you can see on your screen. We saw the numbers in absolute terms. We're looking at the percentage terms now. That growth hasn't kicked through, especially with regard to its most profitable Naukri business. So I want to see whether that business actually starts kicking through in terms of growth. The Matrimonial business has done okay in FY25, but of a low base, because FY23 we saw degrowth, mind you. Property has done decently well. We saw how it's been doing, 17% growth on the back of 31 and 24, not bad at all. And last one is with regard to education. You're looking at, again, a declining growth clip with regard to education. Even though we saw a good solid spike in terms of the numbers, now it's declining. You want to see whether these start making profit, because growth is declining and you want to see whether profitability starts to kick through or not. Now let's quickly talk about the recruitment business in terms of sector-wise, what you're seeing is the top line is around 1880 crore, the sector-wise revenue picture, versus the 2000 crore number in FY25. We spoke about some of these numbers, and look at the total number. It's 2850 versus 2000. So a large part of the revenue sits in the recruitment solutions business. Now, I want to also last off talk about the 99 acres business, the total listings, because some of those also contribute to how the business traction is and how that gets built up. So when you're looking at, okay, so this is the billings by customer type, the different types of customers which contribute to the billings within the recruitment business. This is the recruitment consulting business, contributes around 26%. The tech and IT services 28%. Now, why I have put this up? Because this tech and IT services is at risk given AI. So I want to see whether that is actually at risk, or can the growth clip and the revenue and the billings by customer in terms of percentage continue. That's how the breakup with regard to the 99 acres customer base is. The type of customers, brokers, owners, and builders. That's how the split currently sits at. Again, the billing breakdown, brokers, owners, and builders. Just for information, of course, as to how the billing as well as the business works with regard to 99 acres. Now, let me quickly take it across. I hope we've tried to, as comprehensively as possible, cover the way in which this business works. Let's talk about the metrics that we look at on today's KYC. We look at the income statement, the balance sheet, the cash flow, the shareholding. So those are the four first metrics we look at. Thereafter, we look at street cred, outlook, valuation, and street coverage. That's how we'll kind of cover all of the parameters today. Let's start off with the income statement. The top line growth has been reasonable, 21% odd over the last 3 years, FY22 to FY25. That's quite a decent growth clip. EBITDA has gone and done much better because some of the non-profitable businesses are obviously inching towards profitability. And that's why what you're seeing is your EBITDA going up 31% on a compounded annual basis. The net profit may not be the best metric to look at because there are exceptional and one-off items which are always sitting there. Like, for example, in FY22, you had the listing of a Zomato where around 2.5% stake was sold by Info Edge as part of the IPO, and some of those proceeds are sitting there in the net profit number as well. So maybe not the best metric to look at, but look at the revenue and the EBITDA. Honestly, it's a cash flow positive business, and therefore the net profit in its core sense may not really matter as much given the kind of gyrations that you will see periodically with regard to the net profit number. Let's look at the balance sheet now, and let's try and break this one down. Now, in terms of the balance sheet, it's a clean balance sheet, no equity raises that they do, a large other equity base. Look at the way other equity has gone up because of all the stake sales that they've done. So 13,000 crore was the equity base maybe in FY23. It's currently sitting at 35,000 crore. There's no borrowing on the balance sheet. There's decent amount of cash sitting on the balance sheet. They continue to deploy the free cash I did mention in some of the ancillary businesses which they run, as well as the fund which they run to incubate other businesses. So, so that's how the play kind of works with regard to the balance sheet metrics. There's definitely a decent amount of cash and no real equity or debt issues per se. Let's talk about quickly the third metric, the cash flow. Now, you look at the way in which cash flow has gone up. It's a free cash flow generating company, mind you. It continues to generate cash at a rapid pace with regard to its platform businesses because the platforms are already set up. What they do is they do a little bit of investing in AI to optimize the platforms better. But outside of that, your cash flow from operations continues to grow at a very healthy clip. So no concern there. We've given that a thumbs up as well. Some of this cash, I did mention, gets invested to their AIF, which invests in new businesses. That's how the net cash flow adds up, and which is why it's currently negative. They also give some amount of dividend to shareholders, which kind of impacts that cash flow number. Let's talk about the balance, let's talk about the shareholding now. When you're looking at the shareholding, Around 38% is promoter holding. Around 30 to 34% is FII's holding. Around 16 to 18% is DII holding, and the balance is public. See, the public holding is very low, which is likely a positive of sorts. But when you're looking at the promoter holding at 38%, 24% is owned by a Sanjeev Bikhchandani alone, who is the founder. And thereafter, there are some of the other promoters which also hold stake. So that's how the 38% is held. In terms of when we've seen promoter incubated businesses, we've seen that they hold a larger stake. Promoters hold a larger stake. That's not so here because it's a typical Indian startup which has diluted some of the promoter holding. No concern, let me put that across in candid terms, but when you have FII and DII holdings which are that large, you might see exits, and therefore you could see some exits happen at some point. So something to look out for, and hence we've been slightly more cautious and given this a neutral. So shareholding out of the way, let's talk about street cred. Now, in terms of the way the stock has performed, 1 month absolutely flat, 6 months down 14 odd %. Year to date down around 19 odd %. So some pressure in the very, very short term, but in the 1 year term, it's up 16%. So that's a positive. And then you're looking at a 5 year where the stock is up 2.5x. So it's a 2.5 bagger over the last 5 years. Therefore, we've given this a clear thumbs up with regard to street cred as well. Now, I want to delve a little bit into the outlook and what's playing out. One, the company owns around 12.5% in Zomato and PB Fintech. I did mention this. I did the math as well. Around 35,000 crore in market cap currently owned by these two. Typically, you give a holdco discount when you have such large holdings in companies, and therefore, even if we were to give a holdco discount, that'll be around 20% odd. That's what average analysts are penciling in terms of holdco discount. The second piece is it leverages on cash made by Naukri to invest in newer businesses. It invests in existing businesses, uses the AIF vehicle to invest in new businesses as well. It's now set up a completely different business with regard to investing. It does that through its AIF, which is the vehicle they use. The recruitment growth is led by niche and adjacent segments, including branding services. You want IT to grow or you want branding to grow? That's really the question, and that's something I will pose to the management as well. The A&P spend has increased, which is likely a concern and might impact margins. You have hiring activity, which remains subdued at this point, and therefore likely if IT hiring activity were to pick up, you could see a positive, but at this point, it's still weak. Look at expansion into new towns and customer additions. That's what's driving growth. It's not IT revenue or hiring. It's expansion into new towns which is driving growth. In property, you look at billing growth, which has accelerated in Q4. Can that sustain? Can profitability as well come through? And in terms of cash EBITDA, the segment has improved given the strong billing. So that's how we kind of sum it up with regard to what the outlook is. Let's talk about valuations now. In terms of EPS, FY26 average analyst estimates 19 rupees of EPS, FY27 23 rupees of EPS. So you are seeing the price to earning multiple shrink quickly, but as per Bloomberg, the competition average is 31 times. If I remove Zomato and PB Fintech from the market cap to adjust the price to earnings ratio, that adjusted price to earnings ratio will also be maybe around 50 times odd. So therefore, you will see this as slightly expensive compared to competition, maybe much more than slightly expensive compared to competition. And therefore, we've given this a thumbs down, given that growth does not seem to be very, very strong. Like some of the other startups. We see startups growing at 20, 30, 40%. This one is growing somewhere at mid-teens. So something to take care of. Last off with regard to analyst recommendations. There are 15 buy calls, 5 hold calls, 1 sell call, potential return being 14%. There is some bit of caution. We'll give this a neutral as well. To sum it all up, let's look at the rating. It stacks up as you can see on your screen. There you go. So 3.5 with regard to the first 4 metrics, and thereafter you have 5.5 as the total on our KYC rating with regard to an info edge. That's how it stacks up. Now let's quickly go across. We spoke with the management earlier. I spoke to Chintan Thakkar, who's the Director and Chief Financial Officer of Info Edge, and I started off by understanding the risks which are getting priced in for FY26 from a growth perspective. Listen in to that entire conversation. So first off, I want to start off with Naukri. Growth in Q4 looks decent, but can this sustain is really the question. When I'm looking at the numbers, maybe over the last 3 years or so, the growth hasn't really seen a significant uptick. Do you see that in FY26, and what's the reason for that? Give us some perspective.
So first of all, thank you very much for having me.
It's a pleasure.
Going straight on the questions on the recruitment solutions. If you look at 3 years as the time frame, then we were coming out of COVID, and I think there was this great surge that happened, right? And in that process, what happened is that there was a level of over hiring that happened. So that's why in the second year we've seen that kind of the growth kind of got steady over there, right? And it was flattish. If you really look at this year, right? This year in FY25. We have seen that Q1, was little kind of, it's coming out of that, the flattish type of a year that we had, in FY24. And we had said that, look, it seems that we are coming out of that U-shaped recovery, right? And that's what happened. So Q1, the Q2 was better than Q1, Q3 was better than Q2, and Q4 seems to be better than, Q3. So I think it looks like that it's an upward trajectory. And when I look at the numbers, and we can divide it in terms of the verticals, in terms of geography, functions, yes, there would be some pockets of higher growth and some would be little lower growth, but on the whole it looks like that it's a very secular trend. Also what we are hearing from the ground is that I think there seems to be a little bit of a momentum continuing over there. We also seem to be executing much better because of the adoption of AI that we have done in our products as well, in terms of how our algorithms are working, how our matching platforms are working, right? So when you look at, let's say JobSpeak Index, as compared to that, we seem to be performing, a bit better. And I think a lot to give credit to how the product and the engineering people and the sales guys have kind of really performed. So we seem to be doing a little better. I really hope. Of course, in today's world, I think every day and every week could be very different, and the whole business environment seems to be so volatile. It keeps changing. Business confidence keeps changing. This is one tweet or one news item.
Sure.
I think keeping that and all those external factors which can impact us. Other than that, that it looks like that it's a reasonably that yes, Q1 to Q2 to Q3 to Q4 we seem to be ramping up. And maybe we should be able to hold on to this type of growth. Certainly from our side, we would want to achieve that as a part of our goal for next year.
Sure. So with regard to IT in particular, and I'll talk about the recruitment business first, let me take that out of the way. IT, there still seems to be some amount of momentum which needs to get built up, because that doesn't seem to be playing through. What's the sense like on ground with regard to IT? And do you believe that there is a systemic challenge that IT recruitment may be on the wane for maybe the medium term? Is that a risk that you're dealing with, given the AI, given the AI risk that IT employees run?
So first of all, I need to put the IT in perspective, because when we say IT it's a very broader kind of a spectrum, right? So IT has IT services, the export-oriented IT services company. Some of them are listed, and a lot of the narrative gets built on the basis of what those guys are really talking about in the market. But then there are product companies, there are BPOs, and there are GCCs, right? So there are some pockets where it seems to be doing well. GCC is certainly a brighter spot than what the IT services companies are. So I think on the overall trend basis, we think that there are certain pockets in IT where it seems to be an opportunity so far as our business is concerned. I also want to kind of highlight that, like I said in my earlier comment, that look, even if there is no gross hiring happening in IT services, there is attrition. Right? And the attrition is also because of GCC coming and triggering some of those attrition. Some of these startup companies that gets funded, or some of the other tech-oriented manufacturing that seems to be setting up in the country. That kind of triggers some of the attrition. And when there's an attrition, there is at least a replacement. So for us, whether it's hiring because of the overall growth and expansion, or it is just to replace the existing account, for us it is still a growth. So in that sense, I think we need to also take into account that IT services company, their utilization rates are at its peak, and they seem to be doing a lot of replacement hiring. That's certainly happening. So that's helping our business. That trend may continue. The AI trend, has also, there are two sides of the spectrum. One is that the lower value items which is mostly like around your customer support services and some of those type of segments, that could be an impact over there. But at the higher end, the guys who are involved in data science and machine learning and high-end engineering, I think there the demand is far outweighed than the supply is. So I think again it's a mixed bag over there. Yeah.
So point taken. I want to therefore talk about now other businesses. What's the profitability outlook there? Because while Naukri continues to support those businesses well, at some point you'll want them to turn a corner, right? That doesn't seem to be happening.
Well, I think that we have arrived at that point. So if you look at Q4 numbers on the top line on billing, all the four businesses have kind of clicked good amount of growth. So overall, we have grown. Billing growth is about 19%, which is just not about Naukri, but even if you look at 99 acres, you look at Jeevan Sathi, Shiksha, I think so everybody seems to be growing. And probably this is the first time that we are seeing that all four cylinders are are firing, and they all seem to be growing profitably. So even if you look at from the cash from operations for each of these businesses, which sometimes when you just look at the PBT, which is PBT is helping when looking at top line as revenue, which is like looking in the in the rearview mirror. But when you look at the billing and you look at the expenses, you realize that there is a cash profit that's got generated. So non-recruitment business taken together, it's a cash positive this quarter. And when we look at each of the businesses, like Jeevan Sathi, which used to burn cash, which we have seen a decline in that. Even 99 acres, I think for the year. So both are kind of close to EBITDA neutral. And not only that, for in real estate business, 99 acres, we seem to be also gaining market share. So it's just not about that we are growing efficient, but also we seem to be growing in terms of.
Okay, so that's of course the conversation we had with Info Edge, but completely out of time on this edition of KYC. Stay tuned to NDTV Profit.